Thank you. Okay, it's 4:30. Let's get started. We still have a lot of things to cover. Okay, so let's not waste any time. So on Tuesday, we finished in this question. Okay, so so far what we have done is we have finished let's see, a sales budget. We finished a sales budget and we finished a production budget. Okay, and then we finished direct material budget. Okay, that's what we have done on Tuesday. So we'll continue. We are doing the direct labor budget. Okay, direct labor and the manufacturing overhead budget. Okay, and these two elements is different from direct materials because direct materials have inventory, but direct labor and the manufacturing overhead has no inventory. So that makes things a little bit easier. Okay, so how to calculate direct labor cost? You want to know each unit produced, how many direct labor hours it's gonna need, okay? And then you want to know that how much does it cost per direct labor hour, okay? And then the multiplication gives you the total direct labor cost. Nothing really tricky. Suppose the unit, each unit takes 2 direct labor hours and the hourly wage is $10, okay? So we have figured out from the production unit, production budget. So for each quarter, these are the units I'm going to produce on row number 6. And then each unit takes 2 direct labor hours. So you multiply it by 2. Then on row 8, you get the number of direct labor hours, okay, for each quarter. And you know each direct labor hours cost $10. You multiply the two numbers, you get the total direct labor cost for that quarter, right? It's pretty easy, right? Okay, so now in terms of that's the direct labor hours, right? It's quite straightforward. In terms of the manufacturing overhead budget, so we are dividing this element into 2 components, the variable manufacturing overhead versus fixed manufacturing overhead, okay? So we often assume, okay, we know the amount of the fixed manufacturing overhead. We know that number, okay? And so then it's easy, you just divide it by 4, right? You evenly allocate the total amount of fixed overhead over the 4 quarters, right? So that part is easy. For the predetermined variable overhead rate per direct labor hour, okay? So this is the variable overhead rate. So we are saying every direct labor hour incurred, the amount of indirect materials, the cost is $1. The indirect labor cost is $1.40. Utility cost is 40 cents. And the maintenance is 20 cents, okay? So for every direct labor hour, the overhead is like these 4 elements, okay? These 4 elements. You can also consolidate these 4 numbers together, right? 1 plus 1.4 plus 0.4 plus 0.2, so $3, right? So the predetermined variable overhead rate for each direct labor hour is $3, okay? So you can use either way. The difference is if you use this this single line items, basically you are providing more information, right? Instead of presenting $3, you kind of see, okay, how this $3 is breaking down, right? For this part, okay, $3 is cleaner, right? You only need 1 line in your budget, but you lost the detail, right? You lost the detail, okay? We are taking a look at this example. This is the manufacturing overhead budget, okay? You can see, so this is the variable cost on row 6. That's the variable cost, okay? And in this example, it provides a lot of details, right? See, direct material, direct labor, utility maintenance, right? 1, 1.4, 0.4, 0.2, right? So we know the direct labor hours, okay? We know the direct labor hours for each quarter. These numbers we have just figured it out, right? These numbers we figured out, right? This is our numbers, direct labor hours, right? That's in our budget, okay? So we're gonna use that number, okay? And so then each direct labor hours cost $1 for indirect materials. So we are having 6,200 direct labor hours. So therefore the cost for the indirect materials is $6,200, right? So then you do all this calculation, you figured out what is the total variable cost, total variable overhead, right? And for the fixed cost, it's easy because based on the experience, right? Based on previous years, we kind of assume, let's say the supervisory salaries is 80,000, right? For a year. And then you just allocate this number evenly across the 4 quarters. So $20,000 for each quarter, right? So exactly the same idea. You can see all these numbers are the same for the quarters, right? Right? So you don't, the calculation is very easy. You just need to assume what is the fixed amount of overhead, right? For the year, and then you divide it by the quarter, right? Divided by 4, okay? So you can figure out in total, what is the total manufacturing overhead cost. That's the variable cost plus fixed cost together. That's the total manufacturing overhead cost. And divided by the total direct labor hour, you figured out the manufacturing overhead rate per direct labor hour is $8, right? This is a chapter 5. This is a chapter 5, ABC, right? ABC. So that's the manufacturing overhead budget, okay? And so far we have done the product cost, right? Product cost. We also want to do the period cost, right? The period cost. That's the selling and the main expense budget. That's the period cost, okay? This budget has nothing to do with the production budget, right? So the direct material budget, direct labor budget, and manufacturing overhead budget, they all connected to the production budget, okay? It's all driven by the amount of the units you are going to produce, right? But for the selling and the main expenses budget, it's not based on the production budget, okay? Basically, you just kind of estimate what is the anticipated operating expenses. Again, there are 2 parts, variable versus fixed, okay? The variable cost typically based on the number of units sold. So this would be related to the sales budget, the number of units sold, okay? And the fixed cost is based on your experience, right? So, you know, you just, based on last year's number, and then you want to take into some considerations, you know, if you believe that cost will be lower this year by 2%, right? So then you just use last year's number times 98%, right? That's this year's budget, okay? So fixed cost amount are always assumed, okay? So in this example, we assume that for each unit sold, the sales commission is $3. You pay your salespeople $3 for each unit they sold, okay? And the freed out, like, you know, shipping cost for each unit on average is $1, okay? So this budget, you can see it's from the sales budget, right? These numbers, 3,000, these numbers are from the sales budget. We have covered this on Tuesday, okay? And the variable component is $3 for each unit. That's the sales commission, and $1 for each unit. That's for the shipping, right? So you just use $3 times the units sold, $1 times units sold, right? So you figured out what's the total variable expenses, okay? And then the fixed expenses is assumed, right? It's based on experience. And again, you just allocate it evenly across the 4 quarters, right? That's pretty straightforward. You know, it looks like overwhelming in terms of the amount of numbers, data here, but the calculation, right? It's really quite simple, right? Okay, so that's the selling and the main budget. Okay, so do we have any questions so far? Am I going too fast? If you understand all this stuff, please give me a thumb up. Okay, so I would say half of the class. For the other half, please ask a question. Oh no, there are more coming. So there's a, okay, let's do this all together because someone is on, off, I can't. Okay, let's do this all together. 1, 2, 3, thumb up please, so I can see if you really understand this. Okay, good. So I guess I'm not being too fast, okay? That's awesome. Okay. Okay, so with all that, okay, we have covered all the sales, we covered the product cost and the period cost, right? With all that, we could talk about the income statement, right? Because income statement basically is about the revenue and cost, right? Okay, so you have all this information right now from the operating budget information. So the sales budget tells us what's the projected sales revenue. And the production budget, direct material, direct labor, manufacturing overhead budget, this will help me to determine what are the cost of goods sold, right? What are the cost of goods sold? And the difference, the sales and cost of goods sold, the difference is my gross profit, okay? So here, this is the sales budget. You estimated the number of units can be sold. And the selling price, $60, the two numbers multiplication gives you the total sales, right? That's your sales revenue projected. And now what's the cost of goods sold? You know, this each unit is gonna consume, it's gonna need 2 kilograms of materials. For each kilograms, the materials cost $4. So therefore, each unit, the direct materials cost is 2 times 4, that's 8. And it's gonna, each unit is gonna take 2 hours direct labor, and each direct labor hour cost $10. For each unit, direct labor hour cost is 20. Okay, and the manufacturing overhead is $8, right? We calculated the manufacturing overhead cost is $8 per direct labor hour. And now we are using 2 direct labor hours. So the manufacturing overhead cost is $16. When I add them together, that's my product cost. 8 plus 20 plus 16 together is 44, right? So each unit, my product cost is 44, okay? And I know that if I sold $15,000, if I sold 15,000 units, the cost of goods sold will be 15,000 times 44. That equals 660,000. 660,000, okay? And we know, we already know from the selling and the main expenses budget, this is my period cost. Variable cost is 60,000. Fixed expenses is 120,000. So I want to show you where this number comes from. See here, the variable selling and the main expenses is 60,000, and the fixed is 120,000. Okay. Okay. So then there are some other expenses. For example, interest expenses, right? And income tax expenses. Let's assume interest expenses is $100 and income tax is 12,000. Okay. So this is what the budgeted income statement look like. You know your sales number from sales budget. You figured out what's your cost of goods sold. The difference is your gross profit. And we know the selling and the main expenses is 60 plus 120. That's $180,000. Okay. So now these two numbers, the difference is your income from operation, 60,000. And then you minus your interest, 100, minus your income expenses, 12,000. Your end result net income is 47,900. So you are projecting that if everything works well according to the budget, you are going to make $47,900, right? Is this clear?
It's clear to me anyway.
Okay, awesome. Thank you, Ashley. Can I move on? I'm listening to you. You are my boss, right? I'm listening to you. Can I move on? Okay, awesome.
Yes.
Okay, thank you. Okay, so now let's take a look at this question. The production budget is used to derive the budgets for which of the following?
Budget is derived the budgets for which of the following production?
Tosin, what did you say?
D.
D, okay. Florence?
D as well.
D as well. Okay. Janaya?
D.
Ruben?
D.
Hallie?
Yeah, I also got D.
Okay, yeah, because you can see, right? I mentioned this already, right? So production budget, that the number of the units produced, that's driven the amount of materials you are going to use, the amount of labor hours you're going to use, and the amount of overhead, right? So A, B, C, this is all kind of carried by the numbers from the production budget, right? So D, it's all above. Okay, that's correct. So we are done with the operating budgets. So now let's take a look at the financial budget, right? That would be including a cash budget and a budget on the balance sheet, right? Balance sheet. The cash budget is often overlooked, okay? It's often overlooked, but it is the most important budget, right? In finance, you learned about cash is the king, right? Cash is the king. So when I was teaching 2100, right, I was teaching my student that cash is a king. Cash is just like the blood, right? If you think about an organization, it's like a living being, right? Cash is really like the blood, okay? So if you don't have enough cash flows, if the blood doesn't flows, right? Doesn't matter how big the size of the living being, right? You can be an elephant, you can be an ant, right? You know, doesn't matter the size of the living being, right? If you don't have that cash circulating, right? You are dead, right? You are dead. So the same idea. You could be like a multi-billion dollars company, right? The eyesight. But if you don't have cash, you run out of cash, guess what, right? You have to bankrupt it, right? You have to sell your eyesight, right? So cash is the king. So when you run a business, you always make sure that you have enough cash on hand, right? To keep it going, right? So make sure you are aware, you know, this is the most important budget, the cash budget, okay? So in the cash budget, you kind of communicate what is the anticipation in terms of the amount of cash flows, okay? You have to do this at least on a monthly basis, okay? And you have to do a planning a little bit ahead of time. If you believe you are running short of cash, you have to have a plan, right? You need to borrow money from the bank, right? If you have more cash, then you cannot use that excessive cash. You can use the cash to repay your loan, right? So you have to know, right? You have to have a plan. You have to know at what time I'm in short of cash, at what time I'm kind of in surplus, right? So that really help you managing your finance, right? What will be the time you need to borrow money from the bank? What will be the time that you should really repay the money to the bank, right? There are 3 sections. So you are receiving cash, that's the cash increase, and cash disbursement. You are using the cash, that's the cash balance decrease, okay? And then financing, that's the money you borrowed, right? That's the money you borrowed from a creditor. And you have to also include the beginning and the ending balance, okay? Include the beginning and the ending balance in the cash budget, okay? Okay, so for cash receipts, right? You are receiving cash. So of course, right, you are doing business. The main source of cash flow, inflows, is from the customer, right? It's from the customer. Well, they either pay cash, right? They either pay cash or they use a credit card, right? You know, you have to collect it later on, right? So basically, the main source of revenue, that's basically your credit sales and cash sales, right? Okay, you can maybe also receive cash when you receive dividend or interest, right? This is from your investment, right? So if you if the company purchased stocks, right, they may receive dividend, they may receive interest, right? So those are kind of the passive income, right? Passive income. That's also cash inflow, right? Or if they sell their long-term asset, right? If they sell their investment, they sell their you know, PPE, right? Property, plant, equipment, right? They may receive cash, right? So this is all about cash inflows, right? It can be from, you know, from the customers, right? From the buyers, right? Whoever buy your asset, okay? And then how are you going to use your cash, right? Well, when you buy things, right? You buy the materials, you pay your staff, right? The direct materials cost, the direct labor cost, right? And also the other things, right? The overhead cost. This is all cash outflow, right? This is all the cash outflow, right? And also other period expenses, not just the product expenses, right? Product cost. You also incur period expenses, right? So you pay income tax, right? You pay your shareholder dividend, and you are buying assets, right? This is all consumer cash, right? You see how you can use the cash, not daily operations, right? But also you could invest in the long-term asset that's also consume cash, okay? And of course, the financing section, right? Financing section. So when you borrow money, you have a cash inflow from the bank. When you repay the loan, you have a cash outflow to the bank, right? If you believe that you are in a deficiency in terms of the cash balance, or you are under the targeted cash balance, right? Then the appropriate action is to borrow money right away, right? Borrow money right away. If you have sufficiency in the cash balance, okay, it's more than your targeted cash balance, and you can use that cash to repay some of the loan, okay? So this is the financing part, So basically, you need to probably set up what's the minimum required cash balance. What is the amount of cash on hand will make you sleep well, make you feel comfortable, right? So maybe for students, right? For you guys, you don't need too much, right? I don't know, yeah. But if you have like property, right? You have $1 million house, right? You are paying like $3,500 on mortgage every month, right? And you also have student loan, you have car loans, right? You pay your kids to the school. Well, you would want to have cash balance that will sustain you for 3 months, right? Just in case you are, you know, you lose your job or whatever, right? So that's probably probably the cash balance you have on your bank account will make you sleep well, make you comfortable, right? So you should have this cash balance. That's your minimum requirement, just for the emergency, right? Just for the emergency. So that's I just use a personal example, but it's the same idea for the bank, for the corporate, right? And also, what is the the expected cash inflows and outflows other than the operating budget? Are you planning to invest in a fancy equipment? It's going to cost you $2 million, right? Or you are going to sell a piece of old equipment that you can get $10 million cash, right? So this will be relevant to your budget, right? What is the basic cash budget format? Okay, sorry. See, the basic cash budget format is you start with the beginning balance, and you end it with the ending cash balance. And remember, there's 3 sections. You are going to add the cash inflows. That's the cash you received, right? And your beginning plus the addition, that's the total cash available. And then you less the cash you spend, which is the cash disbursement. So that is your cash balance, okay? And then you have a targeted, right? You have a targeted, the minimum required cash balance, okay? You are going to use financing to adjust that, right? Let's say you have more than required minimum balance, you are going to repay, you're going to use some money to pay back the bank, okay? If you don't have enough, if you are under the target cash balance, you are borrowing money from the bank, right? So this financing is kind of like a two-way, it's kind of like a buffer, two-way buffer, right? Kind of like a, you know, the reservoir, right? What do you call it? The, the dam, right? You have the dam, and then you have the ship, right? The boats traveling. So when you have enough water, you let them go, right? When you don't have enough water, you start trying to reserve more water, right? You shut down, right? So kind of like the idea, the financing is kind of like two-way buffer, right? The whole point is you want to maintain a stable level of cash balance, right? That you feel comfortable with. Does this make sense? If you understand everything, let's count 1, 2, 3. 1, 2, 3. Sum up, please. Wow, you guys are awesome. Wow, great. Thank you. Okay, so that's the cash budget. Okay, that's the cash budget. So we are going to see one example. Okay, we are going to see one example. So here, suppose we know the beginning balance is 38,000. Okay, and this is the quarterly cash budget. So January 1st, 2022, we have opening balance of 38,000. And I'm comfortable with a minimum cash balance of 15,000. Okay, yeah, I'll be very nervous if my balance dropped below that number. Okay, then I need to borrow from the bank. So here is about my AR, right? Remember the credit sales, right? So how fast I can collect this money, turn the AR into cash. So 60% collected in the quarter in which the unit was sold. So if I sold these units, right, in this quarter, and I'm able to convert 60% of the credit sales into cash, okay, and leaving the other 40% in the next quarter, okay. So if I sold $100 credit sales in quarter 1, I'm only be able to collect the $60 in quarter 1. And then collected the other $40 in quarter 2, okay? The beginning balance for the first quarter of 2022 is 60,000, okay? And also we have first quarter, we are going to sell an investment in the amount of $2,000. So we are able to get $2,000 from the sale of the investment in the first quarter, okay? The direct materials, okay, so we are only paying 50%, okay, of the materials purchased in the quarter. Okay, so if I purchased materials that worth $100, okay, I only pay $50 in the quarter, in that quarter of purchase to my supplier, and I will pay the other $50 in the following quarter, in the second quarter. Okay, so the accounts payable opening, okay, that is 10,600, okay, and that is paid in the first quarter of 2022. Okay, direct labor, okay, you have to pay them right away, right? Otherwise, your employees will quit, right? They won't work. You can't delay the salary, right? Your employees live on it, right? So that's paid on time. Manufacturing overhead and the selling the main expenses, that's paid in the quarter of the period. Expected truck purchase. So in the second quarter, I'm going to purchase truck. That's going to cost me $10,000, okay? And also I need to pay income tax, and that's the equal payment each quarter. And also we are trying to pay back the loan as long as we have sufficient cash, okay? If there's sufficient cash, we are trying to pay it as early as possible, pay back the loan, okay? So that's the information provided in this example, okay? So now let's take a look at this question. So now let's take a look at the sales, okay? So the sales for each quarter, okay, we figured out that's the 180, 210, 240, 270. That's the amount of the dollar sales for each quarter, okay? We have done that in the previous sales project, right? That number is from the sales project. Now I want to think about the collection, okay, from the AR perspective. So the opening balance AR is 60,000, and that is collected in this quarter, right? That is the ending balance of the last quarter in the previous year, and that's going to be collected in the first quarter of this year. So the 60,000 opening balance will be collected. And I'm going to collect 60% of the sales of the current quarter. So the sales for quarter one is 180,000, okay? And the 60% of it will be collected in quarter one, right? So that is 60% of 180, that's 108,000. And the remaining, the difference between these two numbers is 40%. That's the 72,000 will be collected in the quarter two, okay? And in the second quarter, you are collected 60% of the second quarter sales. So that's 60% times 10,000 here. So that's 126,000. And the remaining will be collected in the following quarter, 84,000, right? So same idea, quarter three, you are collecting 60% of the quarter three sales, 240,000 times 60%. So that's your 144,000 remaining collected in quarter four. Okay, the same idea, right? Then you add all this cash together, you figured out what is the amount of cash collected in the red color numbers for each quarter. Does this make sense? Okay, let's do it again. 1, 2, 3, sum up. Okay, the majority of the class, good. So who has question? Please ask. Who has question? So let's put it this way, in any quarter, you are collecting 40% of the sales from the previous quarter, and you plus 60% of the sales of the current quarter. And the sum of the two numbers is the amount of cash you are collecting, okay? Okay, can I move on, boss? Can I move on?
Yes.
Yes, okay. Okay, thank you. Okay, so now let's think about the purchase, right? We are purchasing the direct materials, right? That's our purchase. So same idea, in any quarter, I am paying 50% of the purchase from the previous quarter and 50% of the purchase of the current quarter, right? So this one, this is the beginning balance of the first quarter. I had to pay this. This is the owing from the last quarter in previous year. So I had to pay it in the first quarter of current year. And I'm going to pay only half of the current quarter purchase, right? Together is how much I need to pay, right? So that this red numbers tells me how much I'm paying the suppliers in terms of cash, right? Is that okay? So if you are okay with the last one, you are most likely to be okay with this one, right? They are kind of similar. The only difference is for AR, you are collecting cash, right? You are calculating how much cash I'm collecting from the AR, the people who are owing the balance, right? But this one is you are paying the supplier, right? So you are figuring out how much cash I need to have, I'm using to pay the supplier. That's the only difference, okay? Okay, so with all this information, let's take a look at what it's going to be like. Okay, so we know we were told that the opening balance for the cash here is 38,000. Okay, please follow my my cursor. Okay, so the beginning balance. How can I make it bigger? Oh, it was big. Yeah. This one, 38,000. How much I can collect? Well, this is 168,000. That's this number. 168,000 I'm collecting. That's the cash I receive. How much cash I use? Pay the supplier, 23,200. Okay, and so I'm collecting this from the customer. And also, there's a buyer. They are buying my investment. They give me $2,000. So this is the cash I received, 170,000 from these two sources. And together with the opening, I have a total cash available, 208,000. And I need to pay the supplier 23,200. I just show you that, right? And the direct labor, 62,000. Where is that? Where is that coming from? 62,000. I have to go back. Okay, go back to the direct labor. Okay, so bear with me for a moment. Direct labor here, right? Did you see the 62,000? That's where it comes from. Okay, that's the direct labor cost. Okay, so we have that number taken care of. Okay, and then the manufacturing overhead, right? Manufacturing overhead. So here, this calculation is A. There's a footnote A. So we are using 57,100 minus 3,800 depreciation. So basically, is the total manufacturing overhead cost minus depreciation. Why? Because depreciation is not cash flow, right? You are not paying anyone $38,000, right? It's not a cash flow depreciation, right? You recognize the expenses, the cost, but it's not a cash transaction, right? Therefore, they deduct that amount of depreciation from that manufacturing overhead cost. Okay, so I want you to remember the two numbers, 57,100, that's the manufacturing overhead, 42,000, that's the selling and the admin expenses. I'm going to help you find it, okay? Manufacturing overhead, come on. Okay. Here, 57,100, okay, for quarter one. 57,100, that's the total manufacturing overhead cost for quarter one. But you have to deduct this depreciation, 3,800, because this is not cash. You are not using cash here. You just recognize this is as expenses. Okay, that's this one. And the selling and the main here, 42, right? 42,000 and minus depreciation 1,000. 42,000 minus depreciation 1,000, right? So because same idea, this depreciation is not a cash item. Here we have, here I'm using 57,100 minus 38,000, 42,000 minus 1,000. You see how these two numbers we get? Okay, so the same idea, right, for the other quarters. Purchase of truck, that cost $10,000, and you are going to buy that truck in the second quarter, right, based on the information provided. And income tax expenses is 12,000 over the year, and you allocate it into 4 quarters, $3,000 for each quarter. So now you figured out what's my total, right, cash outflow, the total cash disbursement. Okay, so this is my opening. This is how much I collected. Okay, and I'm going to minus how much I'm spending. So I figured out my balance is 25,500. This is more than the minimum balance. Okay, so 15,000. Okay, so I'm happy with it. Okay, so now this ending balance becomes the opening balance of the next quarter, right? Then we repeat this. We notice that the cash balance projected for the end of the second quarter would be 12,000. That's not good because I'm hoping to have a minimum balance of 15,000. Now it's $3,000 shortage. I'm going to use financing. I'm going to borrow $3,000 to make it 15,000. Okay, so now I have $15,000 ending cash balance become the beginning for the third quarter. You do this process again, and now you have 22,500. And you kind of think, oh, I actually borrowed the 3,000, and I know the interest is 100. So and guess what? I'm going to pay this back, right? So I'm going to pay the principal and the interest together. 3,100. So now my balance is 19,400. It's still more than the sufficient balance. Okay, so this is the example of you are repaying back to the bank. And again, you follow the same approach, right? Okay, so you get your beginning balance, cash balance is 38,000. Your ending is 37,900. Okay, so this is your cash budget. Do we have any question here? Any question?
No,
Okay.
sounds pretty straightforward.
Okay, good. Thank you, Megan. Okay, let's do this again. I count 1, 2, 3. Thank you, Ashley. Your thumb up is already. Okay, 1, 2, 3, thumb up. Okay, very good. Okay, thank you. So now I'm really happy because it sounds like you guys are knowing you're really following along with me. You are not checking the Facebook or other social medias. That's great. Okay, so that's the cash budget. Okay. Okay, now tell me about this. Which one of the following items would never appear on a cash budget? So again, if you already have the participation mark, you have enough. So please don't raise your hand, okay? If you already have 10 or more than 10, please don't raise your hand, okay? I will ask you, okay? When I need your help, I will ask you, okay? Let's give these opportunities to other students. Irene.
My answer is A.
will never appear. Delivery expenses. Okay, let's see. I'm going to follow the order. Just give me 1 second. Xudong.
I will choose A.
A. Ashley.
I only see B because in the manufacturing overhead, it's already taken out before it's
Okay.
placed on the cash budget.
Okay. Jimmy.
I'm going to say B as well.
Okay. Hallie.
Depreciation expense B, yeah.
Yeah. Michaela.
I'm also going to go with B, depreciation expense.
Yeah. Patricia.
Depreciation expense.
Okay, good. Thank you, guys. So the answer is B. Okay, the answer is B. Okay, because depreciation expenses, this is not a cash flow, right? So suppose I purchased, a house in West Vancouver, cost me $10 million. Okay, I'm only in my daydreaming. I don't think I would ever, unless I win a lottery ticket. Or maybe you win a lottery ticket, you think I'm a nice guy, you are willing to share some money with me, okay? So I would never afford that. So I paid $10 million, right? And then I recognize depreciation, $1 million every year, right? But I'm not paying anyone, right? I already paid $10 million. I don't pay anyone $1 million a year, right? I already paid the whole amount, $10 million upfront, right? I'm recognizing that as a cost, right? $1 million, but there is no cash flow. The cash flow already happened in the very beginning, right? So therefore, depreciation expenses should not be in the cash budget. And in 2100, you learned that when you prepare a statement of cash flows, do you remember? You start with the net income, and right away you have to add back the depreciation expenses, right? Because that's not a cash. You are not using cash, right? You have to add it back. Right? It does reduce your net income, but for cash flow purpose, it does not reduce your cash. You have to add it back, okay? So depreciation expenses should not be on your cash budget. How are we doing with time? Okay. Michaela?
Oh, I think I just had my hand still raised from
Okay.
before, sorry.
Okay, that's a legacy hand. That's fine. I found it's interesting how we are trying to, because we use new tools, right? There are new terminology, right? So people say legacy hand, okay? So if you raise it, for another question, you forgot to, drop it down, right? And then what's the popular word nowadays? MAGA, is that? You talk about this, I forgot. Facebook is going to change the name, right? What is it called? Anyone know? So they are going to
Mega?
Mega?
You're headed back.
Sorry, what is it called? I can't hear you very well. Meta. Okay, Meta, right? So basically, it's like a virtual community, right? So they are trying to create a virtual world, right? A virtual world people can, social, right? So it's crazy. And also, I think IBM just announced about their superconductor quantum computer, right? I think Google was dealing with 54. IBM is already, it's the increase, I think it's over 140, something like that. So it's crazy. I can't imagine what it's going to be like in 30 years, okay? It's interesting when you are thinking about your career development, okay? I cannot stop learning, okay? Don't think that I'm a professor. I'm here watching you guys suffering through your learning, right? You have to work really hard, right? Prepare for the midterm exams, final exams, studying all the time. I'm doing the same thing, right? I am learning almost every day, okay? So it's very interesting if the entry level job is gonna be gone in the future, right? So don't go with the easy route. Think about, I'm just going to be happy to be a technician, right? Accounting technician. I'm just going to be happy to do some kind of, low paid and entry level job, because you know why? Those jobs will be gone in the future, right? So I have my own accounting practice. I don't hire any supporting staff, right? Printing engagement letters, right? Communicating with clients. I don't hire people to do that. So I was able to purchase a system, okay? It's client management system. They basically programmed everything, right? So everything I need to do is just in one place, okay? Communication with the client, different templates for the letters, how quickly I can respond, right? There's reminders, calendars, it's very fancy system, right? So that whole system basically replaced the main job, okay? So I don't have to hire the main people, right? So think about it, right? In the future. So that's why I encourage you to develop your skills, okay? Don't be just happy with get a degree, right? Don't happy to get a degree. If you are able, try get a CPA, right? Don't just be happy with a degree, because you have to plan for the long run, right? If I'm learning, right, constantly, you better do the same thing, right? You better do the same thing, okay? So financial budget, so budgeted balance sheet, So we have done the cash budget. So now let's talk about the balance sheet, okay? So the balance sheet, basically the opening numbers, right? The opening numbers are the ending numbers from the previous year, right? And then you would take into consideration about the changes, right? The changes. So basically, in terms of returned earnings, right? In terms of returned earnings, the net income from the budgeted income statement will be added to the beginning balance of the returned earnings. Then you will get an ending returned earnings number. That number is reported under the equity section of the balance sheet, right? Finished goods inventory, that's taken from the production budget, right? Remember, sometimes we say we are targeting at 30% of next quarter's sales, right? So that's my ending inventory, right? So so that number is actually in your production budget, okay? The finished goods inventory. Building and equipment account, right? So basically, you have a capital expenditure budget, right? How much do you want to invest into new tools, new softwares, right? New equipment, right? If yes, and when, how much you're going to spend, right? That's your capital expenditure budget, right? So that's gonna relate it to your long-term asset, right? On the balance sheet. Okay, so here, this is in this big comprehensive case, this is what we got for the budgeted balance sheet. The cash balance, 37,900. Do you remember this number? We just did a cash budget, right? We just did a cash budget. The opening is 38,000, and we figured out that the ending is 37,900, right? So this number is pulled from your cash budget. Accounts receivable, right? We know this number, 108,000, right? We know this number. So how did you get this number? Okay, how did you get this number? So let's take a look. Okay. Okay, where is it? I think I already this is really a comprehensive case, huh? And you are going to do the same to your group project. Okay, so here, so that's where it is, right? So AR, accounts receivable, the ending balance, okay. So that's your sales. You are going to collect it 60%, okay. And so your ending balance should be 72,000, right? That's your ending balance. For the first quarter, the opening is 60,000. and that's how much you sell. That's how much the sales, right? 186, and the 60% that will be collected. Okay, so 72. So that's the accounts receivable, the ending. How come it tells me a different number?
40% of your 270,000 in the last quarter is 108,000.
Yes, yes. So I'm not. I think I'm speaking the second quarter, right? So they are asking the fourth quarter, right? Because
Okay.
this is the balance sheet at December 31st, right? So I was pointing to the wrong quarter. So we are talking about this quarter, right? We are talking about this quarter. So 40%, right? 40% of the 270,000 is not collected yet, right? Remember, the fourth quarter, they only collected 60%. So the other 40% has not been collected. That's your AR, right? So 270 times 40, right? Why we are using the fourth quarter? Because we are talking about the December 31st. That's the end of the fourth quarter. So that's this number. Finished goods inventory, that's the 44,000. Okay, so how did we have this number, 44,000? So let's go to the production budget. Boy, I wish I can do a better job of flipping all these slides. Production budget. Production budget. Okay, so ending inventory. Is this the one? Let me see. Production budget. So the ending inventory, that's the desired ending inventory units is 1,000, right? So we are projected the ending inventory, the number of units is 1,000. So how much the cost is? Do you remember how much the cost? I will show you the cost. The cost is, we calculated this, right? Okay, no, sorry. Where is it? So you are going to do the same thing, right? When you do the project, you are going to find the numbers from a different budget, right? Okay, is that, where is it? Boy. We just did a calculation, I remember. Okay, so the cost, here, almost there. Cost of goods sold, here, okay, here. Did you see? So we figured out each unit cost is $44, right? Each unit is 44. The target ending balance is 1,000 units. So 44 times 1,000, that's 44,000. Okay, that's how we get this number. Boy, this is not nice. Did you see this number? 44,000. Okay. Raw materials inventory 4080. So where is this coming from? This is from the direct raw materials inventory. Direct raw materials. Okay, just give me 1 second. Almost there. Okay, so here's labor. So here, this is raw materials, direct raw material. No, sorry. Here is the raw materials, right? So we are saying, the ending balance for the raw materials is 1020, right? So that's my target balance for the raw materials, right? And what's the cost for each kilogram? So you are targeting that your ending direct materials inventory balance for the year end would be 1020. That's kilogram, right? Kilogram. And each kilogram costs $4. So I use 1020 times 4. That's 4080, right? Is that the number? 4080. That's my target number. Is that a number? Come on, quick. Yeah, see, 4080, right? 4080. So now the total, I add them up. So I know where cash from cash budget, accounts receivable. This is from the also from the cash budget, right? When we are figuring out the collection, right? Finished goods inventory. This is from the production budget. Raw materials inventory. This is from the direct materials budget. And you add them up, you have a current asset, right? And the buildings equipment, this is from the capital budget. So you just know that this is the from the previous year, right? So this is the cost account, right? And you probably add, okay, 10,000 truck. So in last year, the beginning balance is 122,000. And in the second quarter, you are going to purchase the truck that in the amount of 10,000. So together, your cost is 192,000, okay? And the cumulative depreciation is 48,000, okay? So then this is your total asset, right? So where is the accounts payable 18,600 coming from? This is from, okay, I still have some time. This is from also from the cash budget, okay? When we are talking about the cash disbursement. Cash budget, cash disbursement. Here is the cost. Disbursement here. Okay, so I really want to show you, right? So that you can see where I get this number. So when you do your own project, you have some idea. Here, sorry, here. Here, no, here, okay. So you can see that in the fourth quarter, right? In the fourth quarter, I purchased $37,200 materials, and I only paid 50%, right? So I still owe the suppliers 50%. So what is the accounts payable balance? Is the amount of owing to the supplier, which is 50% of this. So that's 18,600. So let's take a look. Is that 18,600? Here we go. See, 18,600, right? So I'm not lying to you, okay? And the common shares, this must be the same as last year, common shares. And the return earnings is the beginning plus the net income, right? The net income is from your budget income statement, right? So your previous beginning return earnings plus the net income from the budget income statement, that's your ending return earnings. That's where this number coming from. Okay, so this is your budgeted balance sheet, okay? This is your budgeted balance sheet. Remember the order, you first do a sales budget, then you do a production budget, and then you do direct materials, direct labor, manufacturing overhead budget, and then you do the selling and the main expenses budget. And now you have all the revenue and the cost. You are doing a budgeted income statement, okay? And then the next thing you are doing, cash budget, right? And the last thing you are doing is the budgeted balance sheet, okay? Okay, I know this is a lot of information. Does this make sense?
I think it makes sense. It's just going to be a bit of work to, I think, work through a real problem.
Yeah, you just have to understand, right, where this number is coming from, right? So by the time you are at this stage, you should have all the information available, okay? You just have to understand where I'm going to get that information. Yeah, Thomas?
I was wondering, could you give out some practice problems? I know we don't have an assignment this week.
Yeah, so this is what I will do, right? So the reason why I don't give you assignment, I'm thinking, we are using a group project, right? So that's kind of kind of, same idea of testing your knowledge. But I know many of you are hoping to practice this, right? Really, this is really important, right? And you can use it in your life, right? This is your only chance to do this. In other courses, you probably don't do this. So what I will do is I will give you the bonus. Remember how many bonus work we have? I promise you, I'm going to give you 6 bonus work to help each of you to get points. So how many have I given? 3?
I think 3.
Okay.
Yeah, 3.
So I'm going to give you a bonus work only on this chapter. Does that sound fair?
That'd be perfect. Thank you.
Yeah. So you can practice, but also you are motivated, right? You also get some, help you with some grade. Okay. Yeah. So that's what I will do. I will assign you a bonus work that only for this chapter. Okay. And then I will do 1 bonus work probably for chapter 12 and 11. And then the last bonus work is very easy. It's an essay. You just write to a future student, right? So in the future semesters, some students may take this course again from me. So I would like to get your feedback, right? In terms of how should they prepare for this course, right? You have some very good advice for the future students, right? So I'm going to ask you to, write an essay, right? If you write an essay, the minimum word is 500. And then you get 1% the bonus, right? And so I will not disclose your name. So basically, I can compile this information and send it to the future students. Sometimes the professor does not. If I say something, it's not convincing, right? It's the peers, right? They listen to the peers. So I think if you can provide some advice, that would be great. Okay. So Ashley.
I just wanted to clarify. So chapter 10, 11, and 12 were all bonus work marks.
So we are having bonus work 4, that's the chapter 10, and the bonus work 5, that's for 11, 12, and also the last one is the essay. Okay, it's the essay. So.
Okay, I was freaking. I was like, I had a few little bad assignment marks, and I was hoping, I was like, please.
Yeah, so the essay one is almost like a free mark, right? So you just write. There's no right or wrong. It's just how you feel about this course, right? What's your advice and suggestions for the students in the future students? Okay. Does anyone have any questions, Michaela?
Sorry, this is back to related to the bonus work and stuff. But so I saw you updated the Moodle page and there's now 14 areas for participation marks. So is it still based off of the original 10, or like, does that include bonus work marks in there, or?
Sorry, the participation. So for each lecture, there's opportunity to participate, right?
Yeah.
Yeah.
But then I saw, because before on the Moodle page, I was just going through today, making sure I had my 10. Before you updated the Moodle page, it had like out of 10, and now it changed to out of 14.
Oh, you only need a 10. Doesn't
Okay.
matter out of what. You just need 10. Okay. Yeah.
Okay, sounds good. I just saw it change from 10 to 14. And I was like, oh shoot.
If you get 10, you are good. Okay. You are fine.
Okay, sounds good. Thank you. Just wanted to double check.
Okay. Yeah. Anyone else have any question? Okay, I will move on. Okay, so budget in non-manufacturing companies. Okay, so mostly we are talking about the merchandise, right? So like let's say Superstore is not a manufacturing company, right? They are not making anything. They just selling, right? They are selling the merchandise, right? So the retail business. Service companies like accounting firm, lawyers, right? Non-for-profit organization, maybe YMCA. I don't know. Some of the charitable organizations, they are not. Their objective is not to make money, right? So the sales budget, okay, will apply to all of these other organizations. But the difference is for the not-for-profit organization, they will create a revenue budget for donation. The donation is a big part for the not-for-profit, okay? And for merchandisers, okay? So basically, the sales budget That's the starting point, right? Similar idea. And they do not have a production budget for the obvious reason. They are not producing anything, but they do have to purchase, right? So superstore has to buy things from suppliers, farmers, right? So they need to have a purchase budget, okay? And then they need to figure out what is the budgeted purchase, okay? So how much goods do I expect to be sold, okay? So that's the budget, the cost of goods sold, and how much goods I'm expecting at the ending balance. That's how much total goods I should have, and minus the beginning balance. That's how much I should purchase, right? That's how much I should purchase. Okay, so this is one example, which I will leave it for you to go through. I'm really tight with time. Okay, I have 5 minutes. So why don't you go through this example? It's pretty straightforward. Okay, for service enterprise, okay, professionals, right? So of course the labor is a big thing, right? The labor cost is a major cost. If you have more staff, right? If you hired more people than needed, then your labor cost is higher, right? Doesn't match the revenue, and your profit will be low. And guess what? You know, maybe the work is not challenging because, you know, people don't have enough work. Maybe they will have more staff turnover. What if you have understaff, right? If you have less employee, so then what happened is you can't take the potential clients. You don't have enough staff hours. You have to say no to a lot of the work, right? So then you lost some revenue opportunities, right? So that's basically the situation. It's a tricky part is budget the right number of the staff, right? That's the key for this professional service business. For not-for-profit organization, so basically, you know, the for-profit organization, you start with sales, right? That's your main source of income. But if it's not for-profit, you don't sell anything, right? So, but your concern is my cost, right? So I maintain this organization serves a purpose, right? So I incur expenditures to for certain benefit, for people's benefit, welfare, right? So I want to know how much cost on my side. So you should have an expenditure budget first, and then you say, guess what? I need $2 million this year, and then you just go around try to get a donation, right? You just try to you know what's your cost, and then try to get around to get a donation, right? So does that make sense? You budget first your expenditure, right? And then you just hope that you're going to receive enough fundings, donations to cover all this cost, right? So it's not like the for-profit organization. You have to have a sales budget first, okay? And I have 2 questions here. Review 8 and review 9. I'm gonna leave this. Why don't you work on this question? I have 2 minutes. Let's work on this question. The budget for a merchandiser differs from a budget for a merchandiser question because, so Ashley, you have answered a lot of questions, so I'm not gonna call your name. So anybody else have an answer for this? I have 2 minutes, please. Okay, who haven't answered the question yet? Let's see. You guys all answered. Aaron, Florence, Jimmy, you guys all answered the question. Ashley, who haven't answered the question? I'm looking for somebody who haven't. Okay, I have 1 minute. 1 minute. Come on. Tammy haven't answered. Tammy?
Okay, I'm not sure about say D.
D, okay. Okay, I still have 30 seconds. Okay, 29, 28, 27. Come on, who haven't answered questions? Mario?
I'll say D.
D. Okay, Patricia answered. Tosin,
D as well.
Maddie,
I'm gonna say D because I don't think A or B is correct, so I don't know.
okay.
So D.
D. Okay, Hussein,
I don't know. I'm thinking about B.
B.
Because manufacturing budgets are not.
Okay, so let's see the answer. The answer is D, right? So as I mentioned, right, for merchandisers, there's no production, right? They don't produce anything. You don't need a production budget, but you have to purchase, right? You don't produce something, but you have to get your inventory, right? And the manufacturing budget are not applicable, right? You are not making anything. You don't need a manufacturing budget, right? So that is chapter, I believe, yeah, that's the last slide. So we are done with chapter 10. Okay, so you guys are being really nice, and I'm happy you are following along. So class is dismissed, okay? And you guys have a wonderful weekend. So if you have any questions, please stay, okay?
Thank you.
Thank you.
You're welcome.